Welcome back to Krown's Crypto Cave. Over here, wishing you a happy Thursday morning from good old Mordor as I drink the last of my coffee and eat the rest of my ground beef and eggs. But we have some very important magic and internet money business to get over to over here. Anyways, yesterday night, the daily rejecting the 21 exponential long way to the upside and shoving it back down. The next daily has actually taken out the low of the prior. But again, all low volume action. So while this is certainly not positive things, we're still kind of in a range. So just like we spoke on yesterday, how it's not really appropriate to get excited about a breakout to the upside until you first things first, break this area over here at around 64.60, also the 200 exponential, but also need to see major volume breakout on that as well. We did not get that, and in fact, it turns into a rejection and then boom down. But again, just like that was not a breakout to the upside. While this doesn't necessarily bode the most positive things when you have that sort of price action until you actually break this area right here, 63.50, or actually 63.60ish area. You don't really want to get too bearish either, just because you're gonna get caught in a long position over here and then caught in a short position over here. It's like you're just getting fucked in the range. Oh my god. Anyway, so when it comes down to it, just staying in the same range. Overall, the big picture has been unchanged for the last, pretty much 11 months. But you know what? Let's just plot it out really quickly over here, as we do have this area over there. Good, good, good. Boom. Okay, great. So now we can all see it. Okay, so as long as you're living below this 21 exponential, especially on the daily, as long as you're closing it below there, I do lean to the downside, of course. Now, a lot of people were asking me yesterday about the long that I took. Again, please do understand that with that long, I'm playing options positions as well. So over here, I'm short these 6,500 call strikes. So when they do start to creep up, as yesterday it was, I want to be covering a little bit. So that's kind of why I was doing that. Please do understand that it's not because I was getting bullish on the price action. I have to see at least a 4-hour dodo close above 64.60ish area, perhaps even 6,500 if you want to be a little bit more conservative with heavy volume to look for the next level around 67.50. Just kind of playing this guy over here. As you can see, it just decays more. So what happens after that? Well, I take off my long position, just let this decay down. That's trading. I'm not trying to fucking capture every little bit of this. Again, that's good enough is good enough. So when it comes down to it, I mean, that's 10 contracts, barely anything to begin with, but hey, fair enough. So that's what I was doing over there. I felt like it was like I kind of had to follow up on that because a lot of people have been asking me about that. Again, no. I hope that I'm extremely adamantly clear. Hey, you need to break this area over here on good volume, and then yes, I'd be looking for a next leg up. I wouldn't see much stopping you from this area right over here at around 67.50, and really this range over here from like 67.50 to 68.20ish area. Good historical confluence with this area passed in June on this kind of pump up above this level over here. So I do like that for good historical confluence. But right here, right now, as you can see, Bitcoin basically just filling out this range. So I'm actually going to get rid of this guy right here. I don't think it's too helpful. It's just not being respected either which way, to be quite honest with you. So if Bitcoin were to break 63.50 or sorry, 63.60, if you want to be a little bit more accurate over here, I don't see much holding it up from this area right over here, 62.50. At that point, I do think that you probably bounce around here, 62.50, very, very likely, if you were to break this area again, making assumptions here. But just by the nature of getting back down here, it would not bode too well, in my opinion. It just would not look good from an overall classical charting sense. But hey, until you actually break 61.50, it's hard to get too damn bearish, and when I say too damn bearish, I mean looking for those very low targets of 4,000, 5,000, 3,000. That's not even in order, but maybe I'm just a little bit dyslexic. Well, actually, I certainly am. But when it comes down to it, yeah, that's kind of the triggering area that I'm looking for that. Now, of course, there would be bounces to the downside, even if you did break that. But that would be my big area for saying, hey, if you break 6,100 with heavy volume, then very likely you do head down to those much lower targets. Yes, but hey, you will likely bounce along the way. Okay. When it comes down to it, yes, as long as we're below here, I do lean to the downside. I certainly do lean to the downside. We still have the 2-day dildo chart over here, rejecting the 21 exponential. In fact, this is a little bit more of a nastier one, in my opinion, a long way to the upside right here. 3-day over here just closed a new one last night, and we closed our first dildo below this 200 simple moving average right here, that red line. That is the first time that we both opened and closed a 3-day dildo below this moving average since over here in, I guess not on coin on GDEX because you don't have that information. But over here in good old 2014, and then you started getting below it and started to really harass price action. So again, be aware of these sorts of things because it just tells us about the overall trend. It tells us about what it tells us about what the bots and the algorithms are likely programmed to do. So again, first time doing that since 2014, not a good sign. If they are, it looks to me like they are respecting that, just like they are respecting the 2-day dildo death cross, especially as long as you're below this 21 exponential moving average right here and a clear rejection on this wick over here. That is the way that I do read this chart. Going over here to the weekly. Still have a very nasty cross on the weekly, this 21 exponential, this yellow line cross on the downside of the green 55 over here, which is actually gaining momentum away from each other. Again, people are looking at this as a hammer dildo down here. No, it is not. You need to be at the bottom of a downtrend to be a hammer. This is not the bottom right here. It would have to be, at the lowest low, which is obviously lower than that, which is just a redundant way of saying, hey, that's not quite it. And it also needs to be on heavier volume too, which is very visually apparent that this is not. This is very unlikely to be. Not only that, but if we do swap on the good old 10 simple moving average over here, represented by the red trend line, you can see that, yes, it's still curtailing price action, still forcing it down, still harassing it. And as long as you're living below the 10 simple on the weekly, it's more of like an immediately immediately red alert situation. Again, I need to see some major levels taken out, that 6100 level on heavy volume, but as long as you're below this level, it is, it's within striking distance, I guess is the right way to be saying it. I would say that the blue 30 simple moving average on the weekly has flatlined, so that would be a little bit more neutral to slightly positive, if you want to call it that. It's just telling you that the grip is a little bit loosening right now. But again, the way that I look at this is not necessarily the most positive. If we do, can we invert it this way? Damn. All right. Well, whatever. Let's go look at the inverted chart, because I think a lot of people will look at the inverted chart and very easily see that looks a lot like an ascending triangle. Wow, what's going on over here? We have the right volume characteristics, we have the right shape, we have the right size, we have the right smell, the right taste, the right gold member. Nobody fucking knows what that even is in reference to, but hey, the measure move would be pointing you all the way down to about 4100, or all the way up to negative 4100. Wow, crazy shit, Mr. Inverse Hagen Re. Anyways, when it comes down to it, as long as you're kind of respecting this area over here, which, keep in mind, I made this on the 3-day, I believe it was, yeah. So we respect it on the 3-day. As long as you're respecting this area over here and living below or above on the inverted chart, this 10 simple moving average on the 3-day, I do look at that, and that is my first interpretation of this chart. It certainly is my first interpretation. The 3-day actually has the perfect volume characteristics, has a perfect everything, quite literally. If we do bring up our oscillators over here, I should say that our 3-day stochastics are kind of hanging up high, but they're in the bullish zone. They're in the bullish control zone. And again, this is that's more of like a ranging oscillator rather than a trend oscillator. If you're looking at the RSI over here, you can see that actually it is consolidating between the bullish and the neutral zone. Again, though, that's kind of splitting hairs. I would say that this is more neutral than anything, but overall, the RSI on the 3-day, kind of using the exponential as support. Again, I do kind of lean towards this, making at least another stab around 6150, giving it another try over there, maybe even tap in the 200 exponential. But again, let's get off the inverted chart because it's really difficult to switch this around. Anyways, so on the regular chart over here, again, the 3-day 10 simple moving average just curtailing it down, rejection. And if we do start to take out this 6350-ish area, then yes, I do believe that you will start to see a quick stab down to 6150, 6200-ish area. At that point, probably bounce again, but how many times can you tap this support over here without tapping it out? I mean, when it comes down to it, right? We've been looking at the same thing for about the last 11 months almost now, lower high after lower high after lower high after lower high after lower high. And there, in each and every bounce is getting a degree worse. This first bounce was 6,000. The second bounce was 3,000. This third bounce was 2,000. This fourth bounce was 1,000. This fifth bounce was $500. And if we get stopped out right over here, I mean, if you go from the low from about 6,200 to the high around 6,450, that's $250. So you might be noticing a trend over here. In fact, you very much most likely are. Also look at this as well. The way that the daily is currently situated is a rejection of the 10 simple over here. So even though the price action was kind of averaging around, I do believe that last Monday's antics with good old Tether, the really altruistic company, kind of set this off over here. But again, none of the major levels being broken. That's a big that's a big point. You know, to give up, especially on that day just itself, to give up, you know, so that was about a 10% rally. To give up, oh wow, 6% of it. Or sorry, about 60% of it almost immediately within a couple hours was the tell, really. That was the tell. That's not what a true bullish move looks like, at least in my experience. So again, Tether kind of dropping down. If we can go look at it just for 1 second over here, I'm sure that you're already aware of it. Around getting all the way down to about 85 cents and then rallying all the way back up. So again, you know, when Tether drops down, then the price of Tether with relation to Bitcoin on a Tether exchange like Finex will rise to the fucking moon, as we saw over here, to represent that difference. And then, you know, people start maybe chasing the pump, or, you know, people start getting liquidated. So this gets even, you know, even exaggerated. Then that picks up all the arbitrage box who say, oh, whoa, holy shit. Even though we can't, you know, even though there is some sort of a major, you know, premium discount with Tether going on over here, you know, there actually is some arbitrage. So let's buy it over here on the US dollar exchanges, and then, you know, sell it over there, because there's, you know, there's somebody to be made. And then whatever other venues that they do use, because arbitraging can get quite sophisticated pretty damn fast. But even in the most basic sense, you can understand that hey, that's a venue by which all these exchanges rose. Although I don't really want to be charting on Finex, because again, you know, it's you know, when you're dealing with this action over here, it's not that helpful. GBTC closing the day down, along with the rest of the stock market. So we spoke about this yesterday, that hey, if you were to kind of close the day up around here, above this yellow 21 exponential moving average around what was it, $7.45, that'd look okay. But you know, what does this turn into? This is major selling right here. Again, a rejection of it actually is the way that I read it. So overall, I don't like what I see over here. Daily Stokes are losing momentum. Daily RSI still in the bearish control zone. Overall, this is pretty damn bad. Putting on the horizontals here, it's really not until you get back above $8.10 where I start to be a little bit more confident in it. Right here, right now, yes, it's still, you know, it's trying to fight, but overall, still getting rejected by the major areas. Let's go check out SPY's legacy markets over here, because they had an amazing down day. So we spoke about this yesterday, just taking everything off. We spoke about this actually coming into the last week, that hey, you know, the weekly was pretty fucking nasty. This was the time to short right here, the retest of the 21 exponential moving average, and we talked about that, how that was a rejection, and it was very likely to carry on downwards, and that's exactly what's happened. Again, I'm not trying to be arrogant or anything like that, but that's what it looks like. So if you want to reproduce that for yourself in the future, that's what you're looking for. Going down to the daily over here, we also spoke about this as well, and I just want to kind of highlight how this played out. We spoke about how the second that you both open and close the daily doodle below the purple 200 exponential, that's the time when it's really when it really becomes super bearish. And what happens the next day? Again, I wasn't awake for this to actually witness this, but boom, big down, $8.29. So over 3% down, which is pretty damn big for the stock market. And yes, we do, you know, we did, you know, I said this yesterday that, hey, I identify this as a bear flag. And, you know, the measurement points us all the way down here. And I think I said something like, you know, it's a stock market, you know, you never know how long it's going to take. It could take a couple days, could take a week, could take, you know, you just don't know. Well, it took about a day. It took about a day. It's pretty much already there at around 263.5. Here's the thing though, if you can, you know, coming back down to your yearly lows is not a good thing. It's not a strong thing. But the real place where things get extremely bad is below this area right here, 257-ish area. If you start closing a daily below there, that's where things get extremely bad, because you're going to be going over here and you're going to really start to violate some of the monthly areas. Again, the 21 exponential on the monthly is kind of that test for generally bullish, generally bearish. And if we're still living above it, but you know, it doesn't look too damn good right now. Heavy volume on this selling dildo right here as we end the month of October. But guys, October is supposed to be Bitcoin's month. Well, not when you get major bearish divergence like this, and it seems to me that Bitcoin and regular markets are correlated. Monthly Stokes giving you not only bearish divergence, but crossing, but very likely to cross down over here. Probably do bounce around this area pretty hard. I would imagine you probably bounce very hard around this area, but over time, if you do break it, that's the time to really start. I wouldn't say panic, but you know, get those start buying some out of the money puts over there. Anyways, back now over here to let's go check out the monthly for a stamp. Again, you know, Bitcoin's already down there at the 21 exponential moving average. So is it regular markets just catching up to Bitcoin, or is, you know, or are they like truly correlated? Again, you know, just overall, this is not the prettiest of charts. Living below the 10 simple, this red line over here, just the last bouncing around it just like you were in 2014, dancing around the 21, which we just denoted as our kind of generally bullish, generally bearish line. And where is that 21 exponential moving average coming around? Oh, wow, 61.28. So about that 6100 level that we just spoke about. If you do break formally the 21 exponential moving average, which we do tick a new monthly in about a week, I believe it is, as we are coming to the end of October. Holy moly, man, that was fast. This blue 30 simple moving average would become a magnet for price action if this were to be broken. Overall, still a lot needs to be done. You're still kind of hanging out a couple $100 above it, but definitely doesn't look like the most strong thing in the world. A very low volume kind of drift along this area, which for some reason people think that's like a bullish thing. That's actually a very bearish thing to have a low volume just consolidation out of support. No, that's bad. The only way that I really start to change my mind is if you start making a higher high over. I mean, according to the monthly, if we could get back above 8,500, that would be extremely convincing. This looks very droopy to me right now. A clear reversal over here after a 3-year bull run, and just down after that. So again, not the best chart in the world, not the best look on it. But if we go down to the lower time frames, of course, I wouldn't necessarily wait for 8,500 to be taken out to take bullish positions. I would probably be taking long positions if we broke about 6,800. I would even take a long position if we broke out of 6480-ish area, because I think that you'd probably make a stab at 6,750, a couple $100 higher. But again, if you could get back above the 200 exponential, that would be a little bit more convincing, and of course make a higher high over 7,400. Then we can start to really entertain thoughts of, well, maybe it is turning around. But again, right here, right now, closer to the lows than you are to that area. And even then, you still have to do a little bit more. But hey, that would be a good start. Making a higher high for the first time in almost a year, that would be a good start. All right. Okay, what else do we have to talk about? Let's go look at the MBT signal, still hanging extremely high over here. Anytime that this thing is basically above where my cursor currently is, it typically aligns with calling a top in the market. 1, 2, 3, 4. 5 for 5, not bad at all. And as you can see, it is at one of the highest points it's ever been at. Let's go over to the total market cap over here, which as we talked about, did break out first. It did break out first, but again, is that breakout volume over here? No, not at all. And remember, that's the most important thing that of the equation, because we all witnessed this one together. Probably if you were here for the last in like the last 3 or 4 months, everyone was looking at this formation right here. All right, and you were representing this as like a falling wedge probably, and you broke out over here. But remember, a very low volume breakout, that is a chance for a trap, and that's exactly what you got over there. Just boom, red dildos all down your throat. So when it comes down to it over here, this is why I want to be very, very careful. At the end of the day, yes, it doesn't look too good, it doesn't look strong at all, but until I actually get full on confirmation below some of the meteor levels, especially 6,100 on a heavy volume, I don't really want to be taking too big of positions. I think just playing the range is the best thing to be doing. Although as time progresses, it becomes more and more likely to break. So you also are playing kind of like with the ticking time bomb at that point too. If you broke out above again 64-80ish area, then on good volume, then yeah, I would be looking for a nice up move. But until that happens, got to call a spade, right? Let's go down to the lower time frame, see if we can denote any other interesting things. 2-hour Stochs getting pretty far down there, still getting momentum though. 2-hour RSI into the bearish zone. What about the 4-hour? 4-hour tap in the bearish zone, giving a little bit of a love tappy tap. 8-hour completely neutral, but 8-hour stochastics crossing down. These ones have just been faking out all the which way. 10-hour over here, giving you a fresh cross to the downside. But again, this is not necessarily the strongest one of all time just yet. 10-hour RSI is below the exponential, but again, just in the neutral zone. So this is what I'm trying to get out over here. Until you actually see like a formal break of this area one way or the other on heavy volume, you're just going to be getting hunted either which way. There's no reason to play directions right now until you actually get confirmation of one. Otherwise, it's just gambling. Like I said, if you know how to play options and derivatives, then you can actually use that to your advantage. Like I've been doing. I've just been basically selling worthless fucking premium to gamblers. But hey. If that's not you, then well, either learn options and I actually do have an affiliates link to Deribit in the description of this video. Yeah, blah blah blah. Probably annoying that I even mentioned that because it's just like it sounds so fucking shilly. I'm sorry about that, but the good thing about Deribit is that you can actually trade when there is a breakout, and because there will probably be a breakout pretty damn soon, I would definitely be aware of that. But hey, again, you don't need to use that. You can just type it in the top of your browser. Although that link will give you like a percentage off of your trading fees, so more money in your pocket. Anyways, enough about that. Jesus Christ, Krown. So when it comes down to it over here, I'm looking at this, and I don't really see a huge opportunity until we actually get a formal break of this area one way or the other. Until that happens, a lot of people have been getting extremely frustrated. Let's go check out Mr. Buteral over here. Mr. Buteral looks very bad and makes me think that Bitcoin does break this to the downside relatively soon. Mr. Buteral is like just a succession of bearish formations. We have a rising wedge over here, rising channel, drop down, bear flag, drop down and get your eagle on Mr. Buteral, and broke the bear flag to the downside over here and actually retested it perfectly. 1, 2, reject, and down as it kind of tests this horizontal right here at about 199. The measure move on this bear flag would actually point you back down towards your former lows, a little bit below 169, which is a great number. But again, you'd probably want to see Bitcoin break 6,100 before really front running this one either. Although, again, this is not a strong chart. This is a very ugly chart, like one of the ugliest charts in crypto, perhaps. Below all major moving averages on the daily over here, just reject, and then down. I really don't like what I see, especially when you go to an exchange like Finex that has more price history. This one is very damning indeed. Just that overall rounded out top, I really don't like that. That's distribution all along the way, and it looks to me like it's just getting ready for perhaps a major dropout over here. And again, just as an offside, we spoke about the weekly 21 exponential in the green 55 over here. This is Buteral getting it, a few months ago in August, late August, and you can see how it kind of plays out after that as these gain momentum away from each other. Just very nasty as you're using the 10 simple as resistance. This is a little bit of an exaggerated case because this one is just much more relatively weak. But hey, overall not a good look on this guy. Man, this is just an ugly chart right here. Here's the thing for Mr. Buteral. I always want to give a fair and balanced view, like Fox News and also CNN. They're basically like the same shit, right? But hey, if you can get back above this area right here, if you can get back above 255, yeah, hey, I just like Bitcoin getting back above 7,400, I'd take a long, and I don't see much stopping you from like 380ish area, this area right over here. If that were to happen, if we put on our horizontals, yeah, it'd be this guy right around here. It'd be worth a long, but hey, that's what I need to see before I just blindly, get bullish on something like this. Until that happens, the direction for the last 11 months has been down. And yeah, so I think that's probably going to do it for this morning stream. I think that covers just about everything that I wanted to speak on. Oh, also, I want to announce, okay, yes, I am working on my options program. I've started recording. I actually have recorded a significant amount of videos now, and I'm looking for 3 people to kind of test it out. If you're interested in this, definitely hit me up. We're going to do it for a reduced price, but I'm going to want your feedback on it. I'm preferably you're someone who has very little to no experience with options, because I want to start this from the ground up. If you do have a little bit of experience with options, that's cool too, because I will want to get feedback on the actual strategies that I put forth. But hey, if you're interested in that, send me a message on Discord or email, whatever it might be, and I'll go through the process of setting it up for you. Again, it'll be a discounted price, but in return, I would like your feedback. I don't care about like reviews or anything like that. Obviously, I want a review, but I don't like, that just always comes off as like weird, because it's like it's almost like it's implied that it needs to be positive. No, of course not. I want feedback on the material. I want like actual constructive criticism on, does this make sense if you don't have any experience in this? Does this actually get you in a good position to and comfortable making positions as well? Because that is going to be the whole purpose of it. Again, I know that anyone can go on to, insert site here and search up, option strategies. That's not the purpose of the program. Of course, I will go over that kind of stuff, but my purpose is to get you, the viewer and the member, to actually understand how these options work, so you don't have to rely on some silly strategy that's just very, very cookie cutter type shit. I want you to understand, okay, I want to capture this range over here, so the best thing to do is this. But what if it goes against me? Then the best thing to do is that. Oh, but what if I'm in a special situation where maybe my margin's low? What's the best thing to do then? What if margins isn't a problem? Well, then this is the best thing to do. What if what if you want to take it all sorts of different directions, roll it to the next month, all that sort of stuff? That is who I want to focus on. So again, if that sounds like you, send me a message. I'll set it up. I'm probably just about ready to post it. But again, I'm really looking for constructive feedback. So you're also going to need a lot of time because it's really fucking long. It's already 35 modules long. Compare that with my last program, which is 37 modules long. But it began as like 21 modules, and I'll probably add a few more over time because I think it's important to follow up with my own strategies and kind of evolve as the program evolves. Anyways, that's what I'm looking for. Hope this one finds you well. I'll be back on a little bit later, and I look forward to seeing you guys there. Take care.